Hey everybody, Jeff Yasteen here. Make sure you subscribe to my YouTube channel, follow me on Twitter and on Facebook. So let's just pose the question here. Should you buy shares of Carnival Cruise Lines or perhaps Royal Caribbean Cruise Lines? And my answer would be no. Now is not the time to buy these shares. It might be time to buy them a little further down the road, but not right now for reasons that I will get into in the video. But I know for many of you, I watch the Google trend searches and the indexes for that sort of thing, and I know that there's still a great deal of interest in Carnival and Royal Caribbean with the idea that, well, now that vaccinations are going on out there, it's only a matter of time before these two stocks, the Carnival and Royal Caribbean, are going to just shoot to the moon, just same way like GameStop and everything else did. And I don't think that's the case. So let me spell out the reasons why. You can see right here with these kinds of headlines about Carnival's AIDA Cruises. It's one of their subsidiaries. They've paused the cruise season until the end of February. Here's another one for Holland America. Extends their pause in cruise operations at least through April 30th. Here's Princess Cruises. They've extended their pause through, it looks like, at least May 14th. And the fact is that these may still continue to be paused for months even beyond, simply because nobody, least of all the cruise companies, want to take a shot at putting people on these vessels until they're very, very sure that a coronavirus outbreak is not going to result in more headlines and, of course, concerns about people getting sick or loss of life. So, that remains like a huge sledgehammer hanging over the entire industry at this point. So we're just too early in the pandemic yet to really see our way forward on these. The other fundamental reason why it's not really worth buying Carnival or Royal Caribbean at this stage, you can see on sites like this. This is showing us the orders for new cruise ships that are set to join the fleet. And as you can see here, there's in 2020, 6, 9, 12, basically 15 ships were set to join the fleets, even though those fleets weren't running through most of 2020. And now that we're here in 2021, look at all these ships that are set for delivery as well. By my count, there's about 26 cruise ships that are set to join the global cruise vacation fleet. And the reason why that is a problem is because of this. The cruise line companies have sent dozens of older cruise ships to the breaker yards for recycling, to be cut up into scrap over the past year. You can see there's 3 of the older Carnival ships with the iconic red funnels there. But the problem is that as many ships as they sent to the breaker yards to be cut up and sold for scrap, there are still dozens upon dozens more, as I showed you in that order book, that are set to join the fleet, brand new ships. So it still remains a problem of supply and demand. There's a large supply of ships out there, and there will continue to be a large supply of ships even after the pandemic ends. And meanwhile, the demand to book into those ships just won't be able to rev up to the right levels for at least several years until people become comfortable and feel like the coronavirus situation is well past. And we're just not at that point just yet. And so here is a look at Carnival shares over basically the last 14, 15 months or so. And we all know this part here from January through mid-March, where the pandemic panic set in, and through most of last summer, the shares more or less languished. Now, I actually turned bullish on these shares around August or so, and rode them up to a nice 40% gain on Carnival's shares. And then I put out another video saying I think the stock has more or less had its run for now until we get another catalyst. Now, as I said, I think a lot of you may think, well, with the vaccinations going on out there, isn't that a catalyst? And I'd like to think so, and actually maybe a year ago would have said exactly that. But I do believe that at this point, for Carnival shares, and really the same thing for Royal Caribbean, it's become something of a, let's call it a show me stock, where in other words, it's one thing to see various catalysts that we think will help move the shares, but ultimately the only thing that matters is what happens to the stock itself. And as I'm going to show you here, it just isn't working yet for Carnival shares. And that's why I say, for now, you should continue to avoid these until we see something otherwise. And here's my point. So we had the first initial very steep decline, and we had this short snapback rally into June of last year. The shares, basically drifted lower, 40-50% or so. Had the next move higher here, and it gets us to roughly $20 a share as of Friday's close. So, in some ways you could say like, well, the shares are just moving sideways. Isn't that a good thing? And I suppose, you could make that argument. Here's what I look at though. We had the snapback rally here to 24. We had a pullback for a number of months. Then we had another rally here, and it didn't quite get up to 24. It got up to 23 and a half or so. And then the shares moved sideways and lower again, and has yet to basically move past even that old high from December, much less the high of June. Now, you can say that, and it's true, the shares are trading above the 200-day moving average, and I suppose that is a good sign. My concern, though, is that for me, I would look at these shares and say, I'm not going to buy them until I see them basically break out to some sort of nominal new high. In other words, at least get past the early December highs at 23 and a half, and certainly get past this point of roughly $24 to $25 a share. Let's see new highs from the stock first, because otherwise, and I've seen this many times with stocks, especially with stocks that I like to look sometimes for value shares. In other words, companies that I think are undervalued. That's certainly not the case yet for Carnival, because they haven't even gotten their ships back online yet, and that's going to take some time as well. I'll get into that in a second as well too. But I've seen this many times, and you can kind of see it even here from before the pandemic, where from 2018, February 2018, what's happened here? High, sell-off, a lower high, another sell-off, another lower high, another sell-off, another lower high, and then an even bigger sell-off. And that just hasn't changed, despite the what we would consider otherwise the good news regarding vaccines out there. So that's why I say this is a show me stock, and if it's me speculating in the shares, I would not buy them again until either it makes a new low, and perhaps some sort of knee-jerk low that really shakes out and scares people, and that would actually set things up for a bigger, more sustainable trend going forward here. But other than that, I would want it to show me a new high here at some point, and we just haven't seen that yet. Okay, so then what do these charts tell us about the cruise industry? Well, I think what it says to me is that, unfortunately, the cruise companies are more heavily damaged by the pandemic and this sort of slow motion recovery we're having. They're just more heavily damaged by all of the events of the past year than, say, the airline stocks, which have the major ones have done better, recovered better, as well as the hotel and other travel stocks, and let's say even the Las Vegas gaming type companies, which have also mounted fairly sustainable rebounds off the lows. That hasn't really been the case yet for Carnival and Royal Caribbean. So that's ultimately what I am waiting for, And otherwise, I would stand apart, stand aside, and let these shares drift lower. And for Royal Caribbean, my instinct is that it may end up drifting back down into the 40s or perhaps even into the 20s. And the same thing for Carnival. It might drift down back to 10 or 8, and it would make a more sustainable purchase at that level than to buy it here, and you might be waiting 3 months, 6 months, or longer before it finally catches a bid and moves higher. Ultimately, as we kind of see our way through to the light at the end of the tunnel with the vaccinations and all that. So basically, it's a waiting game. And the thing you have to remember when it comes to stocks is when you buy shares, yeah, you might say like, well, they're cruise stocks. They're going to come back, and I do believe they will come back. But at the same time, if it takes 3 months or 6 months for you to finally see those shares move higher, and ultimately you might have a 20, 30% or 40% loss or deeper before they finally do turn the corner. Well, number one, that's a loss that you have to sustain until the shares move higher. And number two, if you're waiting 3 or 6 months for a stock to come around, that's 3 or 6 months of lost opportunity to put that money elsewhere and get gains potentially somewhere else in the stock market. So that's why I say for now, I would steer clear of Royal Caribbean and Carnival. Let's wait. Let's have them show us when they're ready to move higher. And every stock does ultimately show us that. And better to be a little bit late catching the rebound on these sorts of things rather than trying to game it and buying early and run the risk of having a steeper loss before we might see a recovery 6 months or a year down the road. If you like what I'm talking about, make sure to subscribe to my YouTube channel, follow me on Twitter and Facebook. I'm Jeff Yasteen.